1666, one fire destroyed most of London, and at the same time it invented modern insurance. Every financial system we rely on today was shaped by fear, loss, and uncertainty. Insurance didn't begin as a spreadsheet, or a policy document, or even a regulated industry. It began as a response to a catastrophe, and few catastrophes have been as devastating or transformative as the Great Fire of London. This is where modern insurance begins. In the mid-1600s, London was a city that was literally built to burn. Most of the buildings were made of timber. Roofs were pitched with tar. Streets were narrow, and a lot of the buildings tilted inwards, almost touching in the middle of the street. Fire was a constant risk, but it was treated like a fact of life, not a financial problem. And if your house burnt down, well, you rebuilt, if you could afford to. There was no insurance, no compensation system, no spreading of risk. Any loss was personal, total, and final. And then in September 1666, a small fire broke out in a bakery on Pudding Lane. Strong winds carried the flames. Wooden buildings ignited instantly. And what firefighting methods they had were primitive and slow. For 4 days, the fire burned out of control. It destroyed over 13,000 homes, dozens of churches, and most of the original medieval city. Around 80% of London was ruined, and almost no one had any form of financial protection. The fire didn't just destroy buildings, it exposed something much deeper. London had become densely populated, commercially complex, and financially interconnected. But risk was still being handled on an individual basis. One person's loss could ruin entire families, businesses, and supply chains. So the problem wasn't fire itself. The problem was concentrated risk, and someone needed to solve it. Enter Nicholas Barbon. He was a physician, an economist, and a property developer. But more importantly, he was a pragmatist. Barbon saw opportunity where others saw ashes. He understood something that absolutely radical for the time, that risk could be shared. And instead of one person bearing total loss, many people could contribute small amounts, so that if and when disaster struck, nobody was left financially destroyed. And this idea would change money forever. In the years after the fire, Barbon helped establish the first fire office. Property owners would pay regular contributions, and if their buildings burnt down, well, the fund paid out. This wasn't a charity, this was pure calculation, and only certain buildings were accepted to the scheme. Brick and stone buildings were preferred. Wooden homes were obviously higher risk and therefore often refused. It was the birth of underwriting. Risk assessment entered finance for the first time. And this insurance didn't just compensate losses. It literally changed how cities were built. Brick replaced timber. Fire brigades were funded by the insurers. Metal plaques started to appear on buildings, marking out which insurer covered the property. And so risk started shaping actual behaviour. And this is crucial. Insurance doesn't just pay out when there's a disaster. It literally reduces the likelihood of it happening in the first place. And once people accepted the principle, insurance spread rapidly. From fire insurance to ships to cargo to lives, health, income, and everything else. The same core idea remained. Many people, small contributions, shared risk. And it's this principle that still underpins modern insurance and finance today. The Great Fire of London didn't just destroy a city. It created risk pooling, financial resilience, and predictable recovery. Money became less about survival and more about planning. It's a moment in time when finance stopped reacting to the past and started predicting the future. And we really do like to think that modern finance is complicated, but the foundations are really simple. People face uncertainty, disasters do happen, and systems evolve to survive them. Insurance wasn't invented out of comfort. It was a phoenix that rose from the ashes. And every single insurance policy that's written today can trace its logic back to one fire in Pudding Lane in 1666. Modern money didn't begin with banks. It began with risk. And it didn't start with algorithms. It started with people trying to survive uncertainty. Thank you for tuning into this episode of The History of Money, where we explore how financial systems evolved from catastrophe to calculation, from barter to Bitcoin. Check out the website at thehistoryofmoney.com and make sure you subscribe here on the YouTube channel. And join us as we trace the history of money from barter all the way to Bitcoin.